Hi investors, welcome to today's video. Today we are gonna decode Q3 update of one of the interesting jewelry company which has just outperformed its peers and even its industry. When the peers like Bluestone are just crying in the con call like because of the gold prices, we are just seeing the demand sluggishness and all that stuff. This company is growing like a hell. So what if I told you that one jewelry company sold 277 crores worth of jewelry in just one single day? Not in a Diwali week, not in a month, but in a one day of Dhanteras. And the same company just delivered 46% revenue growth in this Q3 and 32% same store sales growth SSG. That's a quite high, and its highest ever monthly revenue in October, this October. And this is the Q3 FY26 update of PNGadgil Jeweller Limited, a 93-year-old brand that is quietly becoming one of the India's most powerful organized jewelry retailer. Let's break down its numbers, execution, what's the strategy, and what it means to investor this time. So let's first decode its number, its headline. That actually what matters a lot. Q3 FY26 revenue. The total revenue comes around 3,302 crores. It was the growth of kind of yearly YOY basis, 36%. YOY growth was 36%. The core revenue excluding bullion parts, which is B2B, okay, will come around 3,169 crores, okay, versus 2,176 crore last year. Okay, so this is the growth of 46%. That's quite heavy. This is important because bullion B2B business is low margin and volatile, while the retail jewelry is the real wealth creator. PNG growth is clean, retail lead growth. So retail is the engine. PNG retail segment delivered 46% YOY growth, 83.2% total revenue contribution. This tells you one thing clearly: PNG is no longer just a legacy jewelry retailer; it's scalable retailer platform. If you look toward the same store sales growth (SSG), which came around 32% in this Q3. So for the context, anything above 10 to 12% in jewelry retail is a strong. Okay, 32 means an existing stores are selling dramatically more, not just the new stores are adding revenue. This shows strong brand recall, high footfall conversation, and effective festival merchandising. So if you look toward the festival season execution, this is where PNG won. Now let's talk about its execution, because jewelry is all about timing. Festival sale performed. Dhanteras 190 crore they made, which was growth of 64% YOY basis year on year. Dhanteras they made 277 crores, highest ever single day sales it was. Okay, and total Diwali sales contributed around 606 crore, which was up by 74% YOY basis than last year. And here's the kicker: October 2025 alone, revenue contributed 1807 crores. YOY basis growth was 72%. Everything is growing more than 50%. This means PNG didn't just benefit from demand; they captured the demand better than its peer. So if you look toward that e-commerce and franchise silent growth engines, retail gets spotlight, but PNG's optional growth lever are kicking in. E-commerce 138% YOY growth. Now 5.1% total revenue comes from e-commerce. Jewelry e-commerce isn't easy. Trust matters. This growth signals strong omni-channel strategy and younger customer traction. Franchisee FOCO 12% YOY growth, and 7.7% of revenue comes from their total revenue. From their total revenue, 7.7% comes from FOCO model, which total equation comes like franchisee growth is equal to asset minus light expansion plus fast geographic reach. If we look toward the product mix is quietly improving. one of the most under-penetrated data points. Studded jewelry 52% growth it was in these 9 months of FY26. Studded ratio was around 8.4%. Why this matters? Studded jewelry is a high margin, less gold price volatile risk, and better brand differentiation. PNG is slowly upgrading its revenue quality and not just chasing the volume. So if you look toward the store expansion, scaling with sustainability and discipline, as of December 31st, 2025, 66 stores were operational. Out of them, 65 are in India and one in the USA. Expansion plans 12 to 14 new stores in Q4 FY26. That's crazy. That's an aggressive. Okay, in one quarter they are gonna open in this next quarter 12 to 14 store. Target is to reach 78 to 80 new stores by this end of FY26, and mix of it will be the mix of COCO company owned and FOCO franchisee owned model. This balanced model protects margin, capital efficiency, and brand control. What this tells us about PNG's business model? Let's step back. PNG is executing four things simultaneously: retail dominance in core Maharashtra market, festival monetization better than its peer, premiumization via studded jewelry, and scalable expansion without reckless capex. This is exactly how organized jewelry winners are built over the year. So if you look toward the risk to watch in this Q3 update also, no story is complete without the risk. Key things to track: gold price volatility, impact on demand, which we are not seeing till now, store level profitability of new outlet, execution of 12 to 14 launches in Q4, sustaining SSG beyond festival quarters. But so far, PNG's execution suggests discipline, sustainability over aggressiveness, and that's quite cool. The bigger picture comes here is PNG Jewelry is not just reporting a strong quarter, it's showing retailer maturity, optional control, operational control, brand lead growth, and a clear path to scale. For the investor tracking India's organized jewelry boom, PNG's Q3 FY26 performance proves one thing: legacy plus execution can still create compounding machine. Hope you like this video, guys. Please like, share, and subscribe this channel and make YouTube brother happy. Let's meet in the next update or video.